Hi everyone, let's have a look at my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the very bullish scenario where we're looking at this to be a wave 1 followed by an ABC zigzag in a wave 2, which is the most common corrective pattern for a wave 2. Then we have another wave 1, 2 and then looking for more upside. I gotta say that I'm not sure if this is yet my preferred scenario because it starts to feel more and more like an alternative scenario. Of course price can push up, but there's a couple of things I do want to talk to you about, and the first one is that this wave 1 over here is not counting very nicely as a 5-wave structure. Now in the previous videos I went into detail with my whole analysis, but I removed it because of the clutter, but it's just not a very clean 5-wave move to the upside. And then if we look at this being the second wave 1, well, preferably we have a 1, 2 and then the second wave 1 and then the second wave 2 is going to be higher than the first wave 1. So the second one higher than the first wave 1. However, this wave 1 over here is lower than the first wave 1. It's not necessarily a problem, but it's not really something you like to see. And then if this is the high of a second wave 1 and we're looking at this structure over here for potentially being a wave 2, well, then the problem is that the 0.382, which is a rare target for wave 2, has not even been hit. So the fibs that you see over here are taken from the low to the high then of that wave 1. The 0.382 is a rare target, not yet hit, and the 0.5 to the 0.786 are common targets, which is between 27k and 26.7k. But as you can see, price has not even come close to these levels. So preferably, if this is going to be a wave 2, you want to see prices moving to the downside. Or if somehow this range, and we'll go to the micro in a second, if somehow this range is part of a wave 4, then yeah, the high of wave 1 might be a little bit higher, and then hopefully take the high of this wave 1, so move up, then move to the downside for then the corrective wave 2, hitting some more common targets, and of course the fibs will then also move to the upside, right? And then eventually after that, move to the upside for then a bigger wave 3. And something that I do have to say, even though they might of course become invalidated if price is going to push to the upside, but we do have some bearish divergences between the high over here and the lower high on price but a higher high on the CVD, as well as more locally. However, in an environment where price is pushing very much to the upside with increasing volume, there is a higher risk of these type of divergences to be invalidated because price will continue pushing to the upside. So it is something to take into account. However, if we do look at these bearish divergences, then the target of the more local bearish divergences are the lows over here at 27.1k, and the bearish divergence target of this bearish divergence, so the bigger one, is the low over here at 26.5k. So those are the reasons why this very bullish scenario, in my opinion, is at the moment, as it stands now, not my preferred scenario because of the bearish divergence, difficult to count wave 1, this second wave 1 not taking the high of the first wave 1, and this wave 2 over here, if this is wave 1, didn't even hit the 382, which is a rare target. So yeah, a couple of reasons why I don't think at the moment that is my preferred scenario. Then we go to the bearish scenario, or at least more bearish scenario, where this now is a 3-wave structure in a wave W. Then inside this wave X, we have a WXY scenario, which is then a 3, and then looking for another 3-wave move to the downside, where the most common target area for wave Y is between the 1 and the 1.236, which is between 26.8k and 26.6k. And if we think about the bearish divergences, then the small ones will play out as we then expect price to move to the downside, taking these lows, and potentially the lower ones here can be taken as well. Even though it is below the most common target for wave Y, you still have the rare target for wave Y, which is the 1.618, just above the daily naked point of control at 26.350, after which we then expect a continuation to the upside, where an interesting target for this wave Y is going to be the highs at 28.3k, which are the highs over here. If we then go to the micro scenario and actually zoom into the 15, maybe even let's go to the 5-minute over here, what are we looking at, right? So if we look at the more bullish scenario, we want to see an impulsive structure over here. So this then is a wave 1, 2, this is then a bigger 3, 4, and then where is 5? Because if this is the high of wave 3, and we didn't yet take the high after this range, then where is wave 5? So at the moment, one can only count a 3-wave structure over here. Now, this whole structure could potentially be a wave 4, but this wave 4 is so much longer in time compared to this wave 2 that the longer this is going to range, the less likely this is going to be a wave 4. So I don't know, wave 4 then has to end somewhere over here, and we really want to make like we really want to see price move towards the upside basically. So at the moment, as it stands, it doesn't feel very likely because of the length of this range, and also if candles are going to close below the 0.5 Fibonacci taken from the low of 2 to the high of this 3, then this scenario becomes kind of invalidated, if it not already invalidated because of the length of 4. But of course there's always the opportunity to push to the upside, but we do have the bearish divergences here as well, which are not very supportive for a bullish scenario. And again, if candles close below the 0.5, it's invalidated. As long as price is pushing to the upside, taking the high of 3 is the minimum that you want to see. And if we then look at the second scenario, which again is a bullish scenario, then we're looking at this to be a 1-2. Then another 1, then this is all part, this range is all part of a second wave 2 for then a bigger 3 to the upside. However, you have to think about wave degrees. So the blue count over here is the higher degree of the white count, because it's a 1, 2, and then a 1, 2, 3, 4, 5, and then that 5 is finishing the blue 3. Then we get a blue 4 and then a blue 5. And usually the lower degree count, which is the white one, has, let's say, not necessarily shorter waves, but the corrective waves are shorter than the higher degree count. But if this is a wave 2 for the higher degree and this is a whole wave 2 of the lower degree, it doesn't match, because the lower degree wave 2 is so much longer compared to the higher degree wave 2. So that's something to take into account as well. So the bearish scenario is that this is a 3-wave move to the upside, and then you have more downside expected, which would fit with the bearish CVD divergences that we have as well. Now finally, this is not something I will do very often, but I do have a big announcement for you, because I partnered with BingX. BingX now is an official partner of this channel, and you can see some of the benefits for the community here in the Discord channel, as well as a YouTube post that I made. So make sure to check it out. I'm actually very proud. BingX is the second partner next to MEXC. You can also find the links below in the description if you're interested. So I'd like to thank you very, very much, and I really hope that the benefits that you get from these type of partnerships are going to help you out in your trading. Now I hope this video was helpful or valuable to you. Please check out the macro and high time frame video if you're interested, and for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.